Hello friends, in the series on the income tax cases, today we will discuss a very important case on the deliberation of section 145 subsection 3. The name of the case is RG Colonizers Private Limited versus Deputy Commissioner of Income Tax, and the case has been reported in 101 ITAT Tribunal at page number 409. The matter has been decided by Jaipur ITAT and the date of the judgment is 4th March 2022. In this case, a very pertinent issue was before the Honorable Tribunal that whether simply on the basis that Assessee has not maintained the stock register, whether books of accounts can be rejected only on the basis of this ground. In the present case, the assessee was carrying on the business of construction. The assessee was under the compulsion of getting its books of accounts audited by the statutory auditor, and the tax audit was also applicable. In both the audit reports, there was no qualification about any defects in the books of accounts, except that the stock register has not been maintained. But the assessing officer said that since the assessee has not maintained the stock registers, hence he is going to reject the books under section 145 subsection 3 and accordingly made the addition. The assessee went to the CIT appeal. CIT appeal upheld the order of the assessing officer. That is why the assessee was before the Honorable ITAT. ITAT in this case, first of all, said that neither the assessing officer nor the statutory auditor and the tax auditor has pointed out any defect into the books of accounts. Further, ITAT also referred section 2 clause 12A, which says about definition of books of accounts, and ITAT said that there is no stock register into the definition of the books of accounts under section 2 clause 12A. ITAT further moved and said that section 145 subsection 3 says that the books of accounts can be rejected by the learned assessing officer only if he is satisfied that the books of accounts are not complete, the books of accounts are not correct, the accounting standards have not been followed by the assessee, or the assessing officer is not convinced with the method of accounting adopted by the assessee. Only in these circumstances, which have been categorically mentioned in section 145 subsection 3, the assessing officer can reject the books of accounts. He has to mention in the show cause notice that because of this matter, whether completeness, correctness, non-followance of accounting standard or non-satisfaction of the method of accounting adopted by the assessee, only then he can reject the books of accounts. So, in this case, the ITAT deleted the addition made by the assessing officer and simultaneously confirmed by the CIT appeal and said that this is not a fit case for rejecting the books of accounts, and said that in every case where the stock register is not maintained, it cannot be a case of rejection of books of accounts, because there are some businesses in which it is very difficult to maintain the stock register, and even if the stock register will be maintained, then the purpose will not be achieved. So friends, this is a very important case as far as the section 145 subsection 3 is concerned, as far as the definition of books of accounts under section 2 clause 12A is concerned. At the end of this video, once again I am repeating the name of the case. The name of the case is RG Colonizers Private Limited versus Deputy Commissioner of Income Tax, and this case has been reported in 101 ITAT Tribunal at page number 409. The matter has been decided by Jaipur ITAT and the date of the judgment is 4th March 2022. Friends, at the end of this video, I want to say that before relying on the deliberation of this video, please read the full judgment, because the full judgment gives you the insight into the facts and circumstances of the case and the whole matter. We try our level best to consolidate the whole matter in 5 to 6 minutes, but it may happen that some facts may be skipped. So please read the full judgment before relying on the deliberation. Thank you, friends.